This TFMR podcast is brought to you by your friends at JM Bullion. Visit jmbullion.com for all your gold and silver bullion needs. Hello again from TF Metals Report, and welcome back to your TF Metals Report podcast highlights for the last week of May, first couple of days of June 2023. Again, a daily podcast. Just one of the marvelous features you receive as a member of TF Metals Report. It's only $15 a month, about 50 cents a day, to interact with the best precious metals community on the internet. Please check us out, tfmetalsreport.com. We began the holiday shortened week on Tuesday this week, with Monday being a market holiday here in the U.S. As the week began, we were looking at a number of things. We noticed what we occasionally see in COMEX gold, sometimes more often than not, a smash of price into the London PM fix, which is the wholesale price that the world observes all the way around to the next AM fix. Well, that PM fix occurs at 3 o'clock in the afternoon London time every day, which on this chart you see here is 9 a.m. Central Time. And look at, on Tuesday, price bottomed out right at that fix. When that happens, you can expect prices to rally usually into the next AM fix, which occurs about 3 in the morning Central Time in the U.S. So anyway, you watch these markets long enough, you learn to decipher those patterns. And that was one of the things we discussed on Tuesday. The first gold chart is the intraday chart. 2-minute candlesticks, okay? Notice again, price had rallied all night long, again up from 1950 to 1980, and then immediately goes down as soon as the COMEX opens. Okay? 7:20 on this chart, 8:20 Eastern. So when the COMEX opens, you can see it on here, straight down. Bottoms out at 8 o'clock Central, a little bit of bounce, and then straight down. And then look at the exact bottom and low, 9 o'clock Central Time. What happens at 9 o'clock Central Time? The same thing as 3 o'clock London time. That is a London PM fix. So price rallies in London, gets smashed on COMEX all the way down into the PM fix, and then the banks let their foot off the neck of gold, and it rallies to the highs of the day at 1982. Do not be surprised, given this pattern and also what happened with the rest of commodities today. Do not be surprised if gold rallies in Asia tonight and rallies early in London, up to 2 o'clock in the morning New York time, 8 o'clock London time, 9 o'clock London time. And then once you get the AM fix tomorrow, Wednesday, that then they lay into it again. So that London traders, if they want to call them that, would have bought the PM fix at these lows down here near 1970, and then sold at the AM fix, and then price goes back down. That happens a lot. It may not happen tomorrow. Maybe other things conspire to keep that from happening tomorrow. But when you rally coming out of London and then dump on New York and put the lows of the COMEX session right in at the PM fix, tells you shenanigans are afoot. Wednesday was May the 31st, last day of the month. And one of the things we discussed in our daily podcast was, of course, the monthly charts and everything else that was taking place that day. And one of the charts we took a long look at was the daily chart of COMEX silver. Very interesting pattern is playing out in the usual bull market fashion of higher highs and higher lows. I think this gives us an idea where price is heading next in the next up leg once it begins. And again, that was the chart we looked at on Wednesday, May the 31st. Now check silver too. It also back above its 100-day moving average, back above that key 2350 level. As we first laid out for you last week, look at the symmetry of these higher highs. And again, higher lows as well. Came off the lows last fall near whatever it was, 18. Went into this box, $1.50 box from early December to early February between 23.50 and 25. Came off the lows in March and went into a box, a $1.50 box between 25, which had been the previous resistance, and now 26.50. Now we maybe have put in that next higher low. We're back above 2350. That's important. We can extend now. Then I think the next target becomes another box where 2650 had been resistance. That should be the next line after we get through there of support with resistance at 28. You know how important 28 is on the weekly chart. That's how we should be rolling along next. If this all plays out, 2650 to 28 would be the next box. We'd then pull back, make the next higher low, and then as the Fed actually begins cutting in August, September, we break out through 28 in the next move higher. Okay? All of that macrocast still coming to fruition, maybe again delayed by a month or two versus what we thought in January that we'd be talking cuts by June or July. But it's all still coming. Of that, I'm still convinced of that. Thursday was the first day of June, and we got the month off to a nice start with a nice rally, good-looking bounce. And what has been driving that bounce? A falling confidence that there will be a rate hike at the next FOMC meeting in 2 weeks. Now, we'll see. What the goons say now and what they actually do in 2 weeks often don't align, but for now, they're kind of talking up expectations of a pause, and gold's been rallying. It will really rally once they actually do pause and begin to cut, but for now, it's all just rhetoric. So gold's rallying. We'll see what happens as we get later into the week, but it certainly gave us a reason to take a sharp, close look at the daily chart of COMEX Gold on Thursday, June the 1st. To gold. Could you ask for more than this? I mean, that is a really nice looking low. Another higher low following a higher high. Bouncing again from the 100-day moving average. And this trend line goes back to note the last low near 1680 back in early November. Breaking out of the downtrend line that began back on May the 4th. 2000 is the critical level, which is why the banks turned on their machines and obviously turned on their machines as soon as price got above 2,000 late morning today. But maybe they won't be able to hold it back tomorrow. Getting back above 2,000, especially on a weekly closing basis, will set us up for the next rung on the ladder, which is 2040. And then above that, 2080. And then above that. And on Friday, June the 2nd, COMEX Gold and Silver both smashed backward again on BLS Friday. That's what we call Jobs Report Fridays. In fact, for the year to date, here on June the 2nd, COMEX Gold is up $137, and that number includes a total of $91 to the downside on the 6 BS Fridays year to date. Of course, as you know, Jobs Report now has magically managed to beat expectations 14 months in a row. And so for the 6 months so far this year, they've all beaten expectations, and the combined loss for gold is $91 on just those 6 days. But nevertheless, still up on the year, $137. And none of this changes the incredibly strong look of the monthly chart. We just finished the month of May. You can clearly see we got a big cup, handle, consolidation flag pending a breakout. That breakout's going to come once everyone is finally on the same page. The Fed has reversed policy and is starting to cut. Not there yet. Still getting these fake outs. Don't let them take your position from you. Be firm, be strong, and you know where this is headed. It's headed to higher prices back half of this year into 2024. Come back next week. It should be a quiet week as we barrel toward the next FOMC meeting in 2 weeks. No goons next week and just a handful of economic data. So hopefully be a quiet week. We shall see. We'll be back with another one of these podcast highlight shows for you next Friday. Till then, have a great weekend and thanks for listening.